Welcome back to the channel, everybody. I am Mick Alphanine. So we're going to begin here with this article on U.Today. We continue to have major events happen across the financial system, which obviously has an effect on the timeline of the deployment of the new financial system. But in this article here on U.Today, this is once again Monica Long, president of Ripple, doing another interview, I suppose, where this individual is reiterating the Ripple's ambition and goal to go after the U.S. market. It says, announced the company's intentions to re-engage with the U.S. market following a major court ruling. Well, we know all about that. But they continue to sound the alarm and let people know, hey, we're going after that U.S. market. We're going after those U.S. banks. We've had multiple representatives from Ripple say this now. So they made that quite clear. And I'll tell you what, I'm going to say this. At this point right now, the U.S. needs them badly. Literally, they need the new financial system. I mean, I just don't see how they survive without it. Now, I will be putting together another members only video, so I have to be careful what I'm saying here because there's information we need to go over greatly. They need the new financial system badly. I'll probably release that video sometime tomorrow. However, I'll say this. I want to point this out to you, right? We know about the commercial real estate. They're not going to solve that problem. It's not going to happen. And they're still at war with people to come back to work, right? A lot of people don't want to go into the office and work anymore. They've gotten used to working at home. So then what do you do with that office space? Now, they have floated the idea, and they're just floating the idea of, hey, well, let's take some of that office space and turn it into apartments. I just don't see how you're going to move quickly enough to do such a thing. I don't know who you're going to move into those apartments, being that a lot of those, situations, those commercial real estate situations are in cities, right? A lot of people are trying to move out of the cities. This is what I'm just telling you what I'm seeing. Maybe you're seeing something different. A lot of people are moving out of cities. They're going to smaller places and, places that are not so city based, like on the coast, like New York and places in California. They're moving out of those places en masse. It's been going on for quite some time. So I just don't see who you're going to be moving into those units if you do put that together. So I don't see that as a resolution. Another reason I don't see that working out, even if you did convert that office space in a timely manner into, and all of this has to do with the banking system, because obviously those commercial real estate losses are going to collapse a multitude of banks. I'm not the only one saying it. You had U.S. Treasury Secretary Janet Yellen say it. You've had members of the Fed say it. We've had various analysts and economists talk about it. We covered it on the channel. All right. So I'm not the only one looking at that, but it's important to keep an eye on that. But just to round out that point, even if you were able to convert those, who's going to be able to afford them? Because the affordability is at an all-time low. People just don't have, or I don't know if they don't have the capital. They're not willing to spend the capital, but they just don't have it there, right? I've read complaint after complaint about prices being too high, both on rentals and on, properties to purchase outright. So who's going to be buying those? You get what I'm saying? So I just don't see a solution happening with that. So now, with that being said, it leads me to this. So you have that commercial real estate problem there, right? Then let's take a look at this here. There's a huge discrepancy, folks. I'm seeing, I'm seeing numbers on the unrealized losses. Of course, the Fed raising interest rates is going to erode value on those bonds, of course. This is not just in the United States, by the way. You saw what Japan just did with their bonds as well, right? So this is a global banking issue. The global banking system is having a major problem right now, but you understand those losses on bonds, right? So with that being said, the last numbers that we were seeing where everybody was reporting numbers at the same time, the last number that I'm able to pull up here is saying that there was a decline from $700 billion in unrealized losses in the U.S. down to 500. I'm rounding off here, about around $500 billion in unrealized losses. Okay, and that's one number I'm getting from the Wall Street Journal. All right, so let's say they're reputable. And then another number I'm getting from S&P Global. This is where they're talking about it was at the peak is around $700 billion. And then it declined to $515 billion, which you might say, wait, hold on, Mick. Wait a minute. Those numbers aren't too far apart. Wait a minute. No, there's something rotten in Denmark. I'm telling you now, because there's a variety of sources, and I'm just going to take one here and I remember this reporting that U.S. banks, this is from fortune.com, U.S. banks have $1.7 trillion in unrealized losses. Now, something's a little fishy with these numbers. How do you have such a huge discrepancy? Now, these were being reported around the time of the end of the first quarter, right? This is when all the numbers were coming out, things of that nature. Nonetheless, since we don't have a firm grasp on what's true, I think a lot of data may be manipulated, but they're in trouble with that much. They're in trouble. Now, they're going to have to, in my humble opinion, they're going to have to continue to raise interest rates and such. It's going to erode bonds a little bit more. Now they have these new requirements they're trying to put on the banks for capital requirements, like how much they have to hold or something like that, I believe. You can correct me if I'm wrong, but I believe that's what I read. They're not happy with that. I saw an article on, Jamie Dimon was speaking on why they're not happy with that, right? Correct? I mean, there's so much going on with the banking system. They're not in a good position. They continue to get hacked. They're having a problem with their electronic systems, right? Now we had even more reports in the last few days of them closing individuals' bank accounts. I'm reading complaint after complaint. You can look all of this up for yourself, right? You don't have to take my word for it. So, I mean, with all of these problems, I just don't see how they're not going to literally either need the new financial system and deploy it faster than everyone is expecting. I say over the next 2 years, or they're finished. There's going to be a massive, massive problem. Now, I'm going to throw something else in there. And what's crazy? I have so many articles here, but let me flow just for a moment. For a moment. The economies. They continue to say the economy is strong, the same way that they say that the banking system is strong. But I have not seen that. Now, what's more concerning with a weak economy, is my humble opinion, this is what I've seen, is that the global economy is on stilts. It's wobbling, and there is rising geopolitical tensions. Now, with the U.S. is a dependent country. It depends on a lot of different places for various important things, food, products, right? They're having big problems. We already know this with China. That's established. They're having other big problems with Russia. That's established. Okay. They're having a variety of different particular problems in Latin America, not as big as the other problems we just discussed, but they have little tensions and frictions down there. Of course, you see what's going on, I believe, with Argentina. They no longer want to use the US dollar. They've been using the Chinese renminbi, right, to pay these different things, even when they just paid off that particular amount with the IMF. You got to keep all of this in mind. We're looking at the deployment of the new financial system. Now, you have to keep your eye on what's going on in Africa. There's no coincidences, folks. So you had the bank coins deploying everywhere in Africa. They were building infrastructures everywhere in Africa. We were talking about that gold, oil, grains, everything. We didn't even talk about uranium and such, silver, all of these different resources. Africa, I remember we were covering this for a long time. Africa was taking back control of that. And now you have a rising tension in West Africa between Niger, all right? And this is how people are pronouncing it from over there, not Niger. They say Niger. So that's why I'm saying it like that, all right? Niger, Nigeria, Burkina Faso, and what's important about that is the cutting off of Western parties from certain, commodities. All right. Now listen, so I'm taking that, right? So you have uranium over there, you have gold, you have oil, these different things. They're going to be cutting people off and such, right? I'm pretty sure they're not going to be using the US dollar anymore as well because of that particular tension. You got to pay it. See, so US dollar, commodities, all of this affects the economy, obviously, of the United States. I mean, if it gets to that point, well, the US dollar does. I don't know about the various commodities that they're extracting. I do know that Europe is. Not sure if they're getting, I'm pretty sure that United States benefits in some way. They have military bases over there, but don't quote me on that. Look that up for yourself. But so you have this grain issue, right? This grain issue coming out of that conflict that's going on over there. You have that going on. You have the semiconductor issue, a problem going on with China. So I'm looking at all of that. Now, those effects, right? And then also you have the OPEC problem with the oil, right? So you have all of those looming effects. They haven't hit the US yet. They haven't affected the US economy just yet. So what I'm keeping in the back of my mind is, all right, I'm trying to estimate what the impact might be once those are felt. Here's another thing, and I told people this. Listen, it's very important to do research and to not be afraid to look at information, even if it's scary, even if it's opposite to what you believe, because there could be valuable information there, right? You don't have to agree with everything and believe everything that you read. No, but there may be a piece, a very crucial piece, a diamond hidden amongst the coal. But if you don't dig in that coal, you won't find the diamond. Now, another thing, they have this, this like green movement going. Okay, for a long time, for those of you who actually make it to the end of the videos and you watch the gold news and silver news, I stated at the beginning of this year, there was going to be a silver shortage because they were rushing. I could see it everywhere. All these companies were rushing to sell solar panels and they were trying to rush to put up those solar windmills, whatever those are called. And they've been doing that all along the coast. Have you seen that? So now they're reporting that silver price might skyrocket. This is not financial advice. I'm just putting it out there because this is definitely going to have an effect on things, not just price wise, but I'm going to put that out there because that's exciting for me as an enthusiast of silver. But now they're saying there's going to be a silver shortage, right? So because there's a silver shortage, of course, that price is going to skyrocket. But also think about this. How does that affect the production of various things? Like some of those semiconductors use silver, platinum, right? Silver is one of the best conductors of electricity. Solar panels and the solar windmills, all of that stuff requires silver. How does that affect the economy if there is a silver shortage? You get what I'm saying? And like I said, maybe those effects aren't felt for quite some time. And maybe they solve that before those effects are felt. I consider all of that stuff, but I still have to consider it. You get what I'm saying? So I'm taking all of that into account. They're in trouble. United States, the Western economies as a whole, but I'm going to take the United States, right? Because it's at the crux of everything, is in trouble right now. They need the new financial system. I don't know. I threw a lot of information at you. Feel free to look all of it up, question everything. Never just take anything that anyone says, not even what I just what I say. I want you to question me. I want you to look everything up that I'm saying. All right. Because I understand that seeing is believing and knowing for yourself, there's nothing better than that. So now, all right, so we're going to move forward. In other words, they need XRP. They need the XRPL. They need traceability. They need a lot of different things. All right. And they need to make it where, yes, it's going to be a multipolar world. It probably always should have been. And it should be even across the board. Right. That way you don't have them cutting each other off. The people on the ground don't have to suffer. Right. Well, I'm just throwing that out there. Right. But that would allow the people on the ground not to suffer maybe as much because now there's fair trade everywhere. Right. So now let's continue on here. So now we have this next article here. And it's from the cryptobasic.com. And it's titled, "An Analyst Projects XRP Rally with Possible 63,400% Surge." All right. Now, this is this person's opinion. It doesn't mean it's going to happen. And I'm not saying it's going to happen. If it happens, I'll take it. But once again, you can't be afraid to look at things like this because there could be a diamond amongst the coal. Right. So it begins here. And I have fun with articles like this. I consider these fun articles. It says, renowned chartist and analyst JD has revealed insightful data regarding XRP's price movements, indicating a potentially bullish scenario for the asset. JD examined historical charts and observed key indicators like the MACD and the ADX/DI crosses, which have historically preceded massive price rallies for XRP. Let's scroll down here. All right, you have some nice charts on here. Once again, from the cryptobasic.com. It says the MACD is a trend following momentum indicator that identifies potential changes in assets trajectory or trend. The ADX is the average directional index, and DI stands for directional indicators. Let's scroll down here. It says a dramatic breakout occurred following this period, resulting in an astounding 63,400% surge to an all-time high of $3.31 in January 2018. So they're looking for a repeat is what I'm guessing here. It says, following the $3.31 all-time high, XRP experienced another downtrend that persisted for 2.5 years, stretching until October 2020. Interestingly, after the MACD ADX DI crossed again in October 2020, it says over 365 days, XRP surged by 1,200%, reaching a high of $1.96 in April 2021. It says XRP observes similar events. XRP is amidst yet another downtrend lasting for the past 2 years. JD's charts and analysis indicate the possibility of a breakout akin to the one observed in 2017 and 2020, leading to a potential high in 2024 and 2025. I'll put my little thoughts in here. I think it could be much bigger than that, honestly, not bigger than 63,000%. If it happens, I'll take it. But I believe because of catalysts, I believe because of partnerships, utility, that we could be looking at something much bigger than people anticipate. I think they're underselling it. I think people are scared, right? They don't want to believe. It's been a long time for others. And I understand that completely. But it doesn't change the inevitability, or I won't say inevitability. Let me not say that. Let me rephrase. It doesn't change the nature of what is possible. And the nature of what is possible is that the utility of it, the fact that you have something that exists like payment channels, where in payment channels, they can only use XRP. And payment channels are the best thing that the XRPL right now has to offer. Also, automated market makers, liquidity provision, providing, right? There's so many things. And we're talking hundreds upon hundreds of banks. And I expect things to happen little at a time by degree. But although there is the possibility everything could skyrocket all at once as well. But I lean more towards everything happening in degrees. I try to make that clear. So all of that is there, right? So let's continue on here. It says, despite the similarities, JD remained cautious about drawing immediate conclusions, which is fair, But he's just putting this person is just putting out their thoughts and their observations. This is how things are figured out. We got to lay things out on the table and consider all the possibilities. Then we can make a decision for ourselves as we have all of the information about what we think is going to happen, right? So now let's scroll down here. It says, if XRP replicates the magnitude of the rally witnessed in 2017, the asset could rally by up to 63,400% at the projected time. This could skyrocket XRP's price to a massive $438. Now, no guarantees. This person isn't saying it's a guarantee. I'm not saying it's a guarantee, but if it happens, I'll take it. I'm not going to close the door on the possibility either. I'm not. I'm staying neutrality, right? So now, and when you're at a neutrality, you're prepared for whatever may come. You stay ready, stay on your toes, right? You're defensive, you're offensive. You have a plan, you have a strategy, right? All right. So now let's move on to this next article here. You have to be fearless in life if you want the big wins, the big victories, right? Know yourself and what you want and what your path is, and then choose the path and then you walk it in strength. That's how I look at it, right? So now, this article is also from thecryptobasic.com, and it is titled, Trader Identifies Potential XRP Retracement Below 50 Cents, but Assures Eventual Surge to $1 since achieving the high of 93 cents on the back of the favorable court ruling on July 13th. Amid this persistent downturn, crypto trader and analyst Johnny believes XRP could plummet to levels witnessed before the verdict on the Ripple case. However, he maintains that a surge to $1 is programmed. Okay, I'll say this. There has been massive long-term holder selling going on. So things have been a little bit more volatile as of late. I expected that. I expected it to come at a little bit of a higher range, but nonetheless, it came, right? And I understand why. A lot of people they've held for a long time, a very long time. And so they feel like now is the time to take a little bit of profit or to get out. Sometimes people have what do they call that? Like their eye, something else catches their eye and they're ready to move on. They think they found a better project. I've seen people say that as well. So they're going to move that capital from here to there. Some people they only have XRP, right? They're not diversified. And so they have capital they need to move it around and have it doing something. They can't have it just sitting there. While others may be comfortable just letting that capital sit in XRP. They may have some capital in XRP, some in quant, some in gold, some in silver, some in stocks. They're well diversified, and none of that capital is anything that they even have to even think about. Just let it do what it does, put it away, and they come back later when everything is popping off. So we're all in a different position, but I understand a lot of people need that capital, so they're going to pull that out. So we had a little bit of volatility, and there's been some healthy pullback going on here, okay? So if that continued, it would not surprise me, as a lot of people bought XRP when it was at much lower price. And so, they're going to take some of that profit, as they're not. Some of them may be believers. I think a lot of them had just gotten in because they saw XRP going up. So, they're going to take that money out. They're going to liquidate. So now let's continue on here. This is my humble opinion. It says Johnny shared these interesting insights in his latest analysis of XRP, citing pointers from a 12-hour XRP chart recently highlighted on X. And also, I'll say this, it doesn't worry me at all. At all. No retail action concerns me at all. Whether they buy, it does not matter to me. Whether they sell, it does not matter to me. I'm here for the banks. Sure, what retail does is entertaining, and it can be fun. When retail makes it go a little bit green, it's fun. Fun time. Makes for fun articles as well. Gets a little bit excited. I absorb that willingly. But it doesn't make a difference what retail does, right? For those big price actions, you need banks. And as you can see, there is, with the bank coins, they're not like meme coins. I know that sounds very basic, but I say this because a lot of people, when they speak as though the bank coins are like meme coins. There is no one who can pump a bank coin. That's not going to happen. As you see, you have huge personalities out there, and they speak on XRP all the time. Huge. And what happens to that price? Nothing. That's because the way that these bank coins are suppressed and the way that they are built with the high circulating supplies, it doesn't work that way. You're going to need banks to step in. So, I just want to throw that out there as well. So I'm not concerned with retail at all. I got in here for the banks. I'm going to leave when I take the bank's money. That's it. So I don't really worry about all of this here, but I do understand that it stresses others out. I get it. I understand, right? So it says here, data from the chart suggests that XRP's drop below the 73-cent territory represented a crucial break below a significant price level. Johnny identified a vital support point at 73 cents, which XRP had leveraged as a hedge against declines to the lower spectrum of the 70-cent zone. Let's scroll down here. XRP to $1 program. It says, should this analysis materialize, XRP would face full retracement to the levels before the rally triggered by the lawsuit. It says, in a previous analysis, the analyst called attention to XRP's inability to flip the resistance at 82 cents to support at the time. He first highlighted the possibility of a retracement then. However, he confirmed that the $1 price target remains in view regardless of the bearish short-term reality. Johnny noted that although the $1 target remains plausible, it will not yet materialize. Wait a minute. I think that what will push it to that level is one major U.S. bank announcement. I think that's all it's going to take. Maybe a few, but I think that's all it's going to take. Ripple to come out and say, hey, we said we were going to go after the U.S. Banks. We have a new, not anything that's old. We have a new U.S. bank that's going to be working with us. We're going to be deploying infrastructures. They're going to be using XRP. I think that's something that could set off that rally. That's why I always say catalyst, right? Keep your eye open for the catalyst. You need something substantial. And I think all the people know that. And then you'll have that price pop that people are looking for, that initial one. I see XRP as having a multitude of price explosions as different forces and entities come in. I've always said that, right? One at a time. So now let's move on to this next article here. So now you have something like this. This article is from the cryptobasic.com. Also, they're on fire again. I didn't realize I had 3 in a row from them, but it's titled Ripple Partner Unveils New Remittances Solution in US and Canada. They continue to dominate. How long before they actuate on these things? How long before they flip the switch? And that's what we need. When you have that type of information coming out, then you're going to see some very, very interesting activity. But nonetheless, an individual like myself, I find this fun and interesting right now because we're witnessing history. We're seeing the cause so that when the effect arises, we know why it will be sustained, why it occurred, and we'll know what to look for in the future, right? So now, it says here, Ripple partner Flutterwave has taken a significant stride in the remittance space by launching a new cross-border payment solution targeted at residents of American nations and European countries. Specifically, the firm announced a new application called SendApp in the United States and Canada. According to the firm, the app aims to enable swift and convenient money transfers between Africans living in the US, Canada, and the UK back to their families at home. The development got attention of a prominent figure in the XRP community who took to Twitter to share the announcement with the crypto enthusiasts. All right. And this is from Wrath of Kahneman. It says hashtag Ripple user Flutterwave extends remittance app to US and CA to facilitate more payments into Africa. We're back to Africa. There's a lot of activity happening there. We've been talking about that for a long time, have we not? Gold, oil, the tokenization of everything. Let me tell you something. The place that stands to benefit the most and flood the bank coins with the most value is Africa. And there is a lot happening in Africa. That's why all these battles are happening right now. What's at the crux of the battles? Gold, silver, uranium, oil. Take a look at it, right? And who's deep in Africa? Ripple, XRP, Stellar is everywhere in Africa. But they try to keep that quiet, don't they? Yeah, they do. People don't talk about that a lot, do they? Stellar is all over Africa, right where they're rich in gold. And those countries know it. Listen, there's something big on the horizon, but hey, don't take my word for it. And then also, so Stellar, Ripple, Algorand is in deep in Africa via Koibanx, Koibanx. For those of you not familiar with that offering on Algorand, right? And then also, who's there? Cardano is also there. Cardano is there. But never forget the one bank coin that's not spoken of, who is deep in Africa, been deep in Africa before all the other bank coins. HBAR, Hedera. They work with a few banks. We covered that before, right? You still have that information? Because I tell people to screenshot things and save it. They work with a few banks in Africa, but the most notable is the biggest bank by assets in South Africa. Hedera works with. So I keep that in mind. The future is bright. The future is bright. It's just like fishing. You have to be patient. When you're patient, you'll catch a fish. Those impatient ones, they're not going to get a little minnow maybe, but you want to catch that big fish, land something nice. You have to be patient. And we all have a different type of patience. To each his own. You know your path, and I know my path. Leave it at that. And I can respect your path. Right? I'm going to be patient with this. I'm going to wait till those banks come, and I'm going to take that bank money. It says Olubenga Agbola, Flutterwave CEO, expressed the significance of the SendApp. He stated that regardless of location, Africans remain deeply connected to their roots and always seek ways to support their loved ones back home. Agbola highlighted that SendApp, built on its vast cross-border experience and global payment infrastructure, aims to empower diaspora Africans to make swift and hassle-free money transfers to Africa. I also will say this. I think a lot of African nations will have a currency and they will back it with a commodity. I think that's where the entire world is heading, so that everything is fair across the board as far as their currency values. They want to have it backed with something. And why wouldn't they? They want to take full advantage of the resources that they have. And that's everywhere across the world, whether it's Africa, Latin America, China. I think that's where everything is heading, right? They feel like it's their time and they know what they hold and they're taking control of that. And that's great for the new financial system because, listen, if you have all of these different stable coins or national digital currencies, as they used to have that term, remember that term? They kind of swayed away from that now. But if you have a national digital currency or you have a stable coin and it's backed by a commodity or that value rather, then that would definitely affect the price of the native protocols that are acting as bridge currencies or providing liquidity. I think that's just logical. So now, it says he further emphasized his mission to provide robust payment tools to revolutionize the payment industry. Recall that the partner, Ripple, got regulatory clearance to offer its payment service in Tanzania last year, as the Crypto Basic reported. All right, so now, I'll read this last little tidbit here. It says, quoting a report from the United Nations, it is estimated these remittances doubled over the decades, hitting a remarkable $100 billion in 2022. All right, so now I'll probably have to make a very long members only video because I have so many articles here for this video here, but I won't be able to fit it today. A little bit behind the time today. So let's end off with a little bit of silver and gold news, okay? Appreciate every single one of you being here, all right? Appreciate your time. I hope you're doing well. I hope everyone that you love is doing well, all right? So now, this is from kitco.com, and it's titled, Silver Prices Will Spike as Record Solar Demand Strains Silver Supply through 2026. It says industrial demand for silver will continue to grow, putting pressure on supply and prices and forcing substitutions by manufacturers, according to analysts at Metals Focus. Quote, over the past decade, industrial silver consumption has grown steadily, raising its share of total demand to around 50%, chiefly through help of the vigorous development of electronic and electrical related applications, unquote. The analysis wrote in the latest Precious Metals Weekly report. Quote, in 2021 to 2022, silver industrial fabrication hit successive record highs, with volumes in 2022 16% higher than the 2010 total. You saw silver was just went up quite a bit, right? It may be down now. I haven't checked the price as of late, but I know it went up. It was consolidating for quite some time, like $22, $23, $24. I think it went up to $27. Is that, correct me if I'm wrong. It went up a little bit. People haven't seen anything yet, but let's keep going. It says these highs were driven by the rapid growth of green energy applications such as photovoltaics, PV, and electric vehicles. Quote, this growth in turn helps explain why in the foreseeable future, the silver market is likely to face a persistent structural deficit. Unquote. What does it do to that price? It says, quote, they're going to shipping records and things of that nature. Let's move on here to gold. Once again, that's from kitco.com if you want to read the rest of that. So what they're pretty much saying in summation is everything's looking great for silver going into the future. I expect big things out of silver, although just outright it's just a fantastic store of value with very little volatility most of the time. So now, this is also from kitco.com, and this is about gold. And it says, no soft landing means, quote, we take out the all-time highs on gold by the end of the year, while equity collapse could drag Bitcoin below 15K. This is from Gareth Soloway. Of course, this is this individual's opinion, but let's see what they have to say. It says a U.S. recession is on the way. This is what they're saying. We know that last year that they already hit a technical recession, but they keep changing the verbiage. So let's just read this. It says, with a big upside for gold and major downside risk for equities and Bitcoin, according to Gareth Soloway, chief market strategist at InTheMoneyStocks.com and president of VerifiedInvesting.com. Soloway joined Kitco News lead anchor and editor-in-chief Michelle McCory to explain the bleak reality behind the latest encouraging indicators and why he believes the U.S. economy is still headed for a recession. No, we're headed for a light depression. If you want to be truthful, it probably is going to be a global light depression. Look at the historical charts. Look at the plummeting value of the dollar. Look at the savings that people have. Isn't it at an all-time low, the savings that people have? Um, I mean, the banks are in bad shape. I just don't see how they're saying, well, we might get into a recession. I just don't understand that. It says, he said the recent U.S. growth data is misleading because they hide significant declines in imports. Thank you. I'm glad you said that. Yes. Quote, to get the GDP number, you subtract out imports, unquote, he said. Quote, U.S. imports have fallen to their lowest level in quite a long time. Remember, I covered an article recently, maybe it was like 2 weeks or 3 weeks ago, not that long ago, but I was talking about an article I saw, and I saw quite a few videos actually, where the ports, there was like a shortage of containers at certain ports, and there were the people that moved the containers were the ones talking about it. It was very interesting. And then also just moving product around was very questionable at certain times because of the lows on the river, right? So a lot of rivers that they used to move these containers on, they were so low that the ships couldn't even move, right? So that was slowing things up as well. I'm not sure if they have rectified that as of yet, or whether that situation has been rectified rather. So now, anyway, let's continue on here. It says, quote, if you look at what precedes recessions, a drop in imports is one of those indicators that tells you something is amiss, unquote. Consumers and employment collapse. Yeah, I've been seeing a lot of articles. Well, let's read this. It says, he said that ostensibly sunny economic indicators also masking economic weakness. Quote, take a look at consumer confidence, unquote, Soloway said. Quote, consumer confidence has been very, very strong recently. However, we can clearly see in the index of consumer sentiment by income, the top tercile of income tells us that the consumer sentiment is very high, while the lower portions of income is still very, very low. And what this tells us is that consumer confidence is high, mainly because likely the higher income people have more exposure to the stock market. And the stock market has been on a torrential ripping higher, unquote. And there's a lot I could say about that as well. Chasing that everything higher and just continuing to put money in, it's, I hate to call it sort of a bubble, but it's very, very questionable. I'll just leave it at that. So Soloway also sees dark clouds gathering over U.S. unemployment landscape. Quote, my fear is that we went through a period in redacted in 2022 where employers had so much trouble getting employees that now they have them, they're very reluctant to let them go, unquote, he said. Quote, I think once we see the recession hit, which I would expect late this year, early next year, I think you'll see a deluge of layoffs coming. We've already seen it in the sector. Then you also have to factor in the AI boom that's coming. Yes, you just definitely do. And I hope the articles I've been reading are not true and companies are not letting go of massive amounts of employees and replacing them with AI as of yet. This is what those articles have been saying, but I hope it's not true. It says goals still set for record highs, which means that because what that does is, as opposed to a traditional layoff spree, once you have AI in there, pretty much most of the companies in that sector that do that, they're not going to have to replace those positions with people. That's it. Those positions are just gone forever. So we'll see what happens. It says gold. Let's finish off here. Gold still set for record highs in 2023. I like this article because they gave a lot of different reasonings as to why it would go there, right? There's always a balance to everything, negatives and positives, right? So Soloway said that while gold is far from the top performing asset this year, he's sticking with his prediction for the precious metal. I'm satisfied with what gold has done. It says for precious metal to set new all-time highs in 2023. And U.S. dollar weakness is a big reason why. DXY was up today. I think it was at 102. It says, quote, if we look at the U.S. dollar, it broke down from a long-term trend line of support, unquote, he said. Quote, this is a longer-term trend break on the dollar, and a weaker dollar is good for gold. I also think we're getting closer to a recession by year end. And the Fed may have to think about lowering rates, which is also positive for gold. I also think inflation still remains slightly elevated in the scenario as well, which is also good for gold. I'll end off with this. I think in 2024 or 2025, if we see a BRICS nation currency that's backed by a commodity like gold, then that's going to be devastating to the dollar's value. But that will chase a lot of people, who are not right now preserving their value in gold. It will chase them into gold from the US. But also worldwide, people will want to benefit from that rise in gold. They will also run into gold, silver as well. And those prices could potentially skyrocket. Not financial advice, just my humble opinion. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.